Hey guys, it's Geli. So when it comes to tax strategies and tax planning, a lot of people just feel like that is left for businesses or that is left for high net worth individuals. But I'm just here to show you that it's not. So I've been posting pictures. I posted one about homeowners, and I posted another one about retirement savings. And those are like tax strategies for individuals and how you can save money on your taxes. And I kind of wanted to go into one that I feel like people understand or misunderstand a lot, and that is the retirement saving strategies and specifically the IRA deduction strategy. So I know a lot of people assume, and I've had people that message me and they're like, oh yeah, that's cool and all, but if you don't have enough to exceed your standard deduction as far as deductions go, if you're single, the standard deduction is $12,200. So if I'm talking about a $6,000 deduction, you're like, oh, well, that's cool. But if I don't have the other $6,200 to deduct other ways, it's a waste. Like I just might as well just take the standard deduction. I'm here to tell you and show you that that's not true. So I'm gonna give you an example. Let's say you're a single person, right? For a single person, the standard deduction is $12,200. So what that means is if you can't itemize deductions, so show a whole bunch of receipts for different tax deductible expenses that you had throughout the year that exceeds 12,200, then you would take the standard deduction of 12,200. So let's say your income for the year, your gross income was 30,000. If you didn't take any additional deductions and you just took your standard deduction, you would subtract that from your income, and you would get taxable income of $17,800. So $17,800 for a single person falls into the 12% tax bracket. So let me see. 12% of $17,800 is 21 or $2,136 of taxes. So that means based off of this income with your standard deduction, they expect for you to pay $2,136. So I mean, obviously, most people withhold income throughout the year, and so any excess that you paid in excess of that. So let's say you had taxes being withheld throughout the year, and it totaled $3,000, and you would get a refund of the difference between $3,000 and what they say you owe. If you paid only like $1,000, then you would have to, when you file on April 15th, that due payment will be the difference between that only $1,000 that you paid versus the 21 that they said you owed. So you'll be owing a little over $1,000. So the taxable income for that turned out to be $2,136. Now, if you're that person and you're also a person who saves, right? If you're saving, and depending on how you're saving, but let's say you're saving in a CD, or you're just putting it in a savings account, you're putting money in a savings account. I'm going to show you how you can use an IRA as a long-term savings. So this is not your emergency fund, but you're going to save money through your taxes by saving. So for this same person, if you contributed, and for your max, depending on what your other retirement plans are, like let's say a retirement plan at work, but for this person, you can contribute, or you can deduct a full contribution of your max, which is $6,000 in 2019. You can deduct that from your taxes, and this is what we call an above the line tax deduction, because it affects what we call your AGI, your adjusted gross income. So this gross income, what you based off this other scenario, will be even further reduced prior to even doing your standard deduction. So let's say you contributed to an IRA last year, the max $6,000. That will make your adjusted gross income from $30,000 to $24,000. Then you would take, if you didn't have any other deductions to take, you would take your standard deduction of $12,200, and you would come up with $11,800 in taxable income. Let's see how much taxes. You're still into that 12% tax bracket with this income. So let's say 12% times 11,800. That means based off your income, your standard deduction, and your above the line deduction of your IRA contribution, you would only owe $1,416 for your taxes that year. The difference between that, so 2136 minus 1416, That's a tax saving strategy of $720 just by changing the way you're saving. So if you're saving and you're not contributing to an IRA, you're missing money. Unless whatever yearly saving strategy you have, and if it's like, money market account or an online savings account, a CD, anything that's not giving you at least a return of $720 for this person, $720 off of $6,000. Let me see what kind of return that is. Anything that's not giving you a 12% return, you should probably reconsider your long-term saving strategy. So I hope that makes sense. So in this case with this person, if they change the way they save, so let's say they were saving that $6,000 other ways or investing that $6,000 other ways. I just showed you how you can make $720, or you can save $720 on a $6,000 savings. So if you're saving other ways and you're not making that 12%, we can probably talk about how this strategy can help you. But I hope this makes sense. Y'all know I can get long-winded. They have the same thing, so IRAs for self-employed people, which they have an even better contribution rate that you can do. I think you can do up to a quarter of your self-employment income. If you're married filing jointly, you can still do this, but they time out how much you can actually contribute, or they phase out how much you can contribute based off of how much income you're making. But for a lot of people, this is a great opportunity. And I'm telling you this so you can think about it for the 2020 tax year. But I'm also telling you this because you can think about it for the 2019 tax year. So the tax return that you're doing this season, you can still contribute. If you have money sitting around and you've been saving, you can still go open up an IRA and contribute your max $6,000 for 2019 and put it as your contribution for 2019 and deduct it from your taxes when you file this year. If you already filed, we can talk about amendments if that's something that you are, if you want to consider. So literally, if you've already filed and you have money sitting around in a different savings account that didn't give you that 12% or that's not going to give you that 12%, let's get you an IRA open. Let's get you contributing, and then we can file an amendment and include your deduction now of $6,000 and possibly save you, for this person, some good money. So that's it for today, and I hope you learned something, and I'll talk to you next time.